Hey, what's up guys? John here. Millions of investors all across America are now upside down in their real estate deals. And when you look at what Noah Kagan's going through right now, you've probably seen him on Instagram. Maybe you've seen him on YouTube where he interviews these billionaires asking people, how did you make your money? Where did you invest? What mistakes did you make? Well, he's got 1 million subs on YouTube. He's done very, very well for himself apparently. But he posted something on Twitter yesterday. It's got about 900,000 views in 12 hours, 18 hours, something like that, about how he just lost his entire investment with a real estate syndicator and how a lot of real estate syndications, it could be in very, very, very big trouble. And you start to connect the dots. A lot of these big social media personalities are raising tons and tons and tons of money, could be walking into a bumpy 2024, 2025, to say the very least.
Home buyers and sellers alike feeling a massive struggle to close deals. 45% of U.S. real estate agents are struggling to pay rent on their offices.
When there's markets full of excitement, like the watch market. Last year, everyone wanted to be in the watch flipping business. It was huge.
Gen Z and millennials suddenly pouring into the watch market.
But what happened when that watch bubble popped? Some of these really big watch personalities took everybody's money and bounced. They just left. Took $5 million worth, remember the timepiece gentleman? Took $5 million worth of watches from people on consignment and then just disappeared. Well, these real estate syndicators, many of them, they get paid on the fees, on just closing the deal. They'll make 2 points right on the pop. So if they're buying a $100 million deal, they make $2 million just closing on it. Then they get management fees and then fees on refinances and fees when they sell it. I mean, it's a huge cash grab. But look at what Noah's going through, and you're going to see something very, very clear. That's going to be massive, massive wealth is going to be transferring hands over the next 24 months, without doubt. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's happening in the real estate market and the economy. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description as well as video. Schedule a free strategy session. Take a look at this. So, lost 100 grand in real estate. Invested in a real estate syndicate with professionals. The original proposal was 11% yearly cash return. The property just went to foreclosure. But Noah, landlords always get rich and real estate always goes up. I don't know. I'm going to stick with entrepreneurship, promoting great deals on AppSumo, making content and putting my money in the S&P 500. I'm not sure I put money in the S&P 500 right now, but all investments have risk. The best one is in yourself. Start your own business. I fully agree with that. And I think Noah does give a lot of really good advice. He puts out some really good content. And so look at this letter that he puts out, or that he received from GVA Real Estate, right? GVA Real Estate, you've probably seen this here. Multifamily cracks GVA delinquent on loans tied to complexes. Now, this is what happens when you invest in a real estate syndicate with the wrong professional. They go in there, they buy in the wrong market. They don't pay attention to, basic real estate 101 trends like this. Look at this. We want to provide you clear and concise communication on the status of Park at Walnut Creek. Several factors have led to financial challenges in the multifamily real estate market and this specific asset. The reality is we acquired the property in December 2021 at the peak of the market, and since then multifamily fundamentals have deteriorated rapidly. In 2021, December 2021, SOFR was 0.05%. Austin's market occupancy stood at 93%, and this asset was bought at a 3.4 cap. 3.4 cap. That is absolutely ridiculous to buy that at a 3.4 cap. I can see if you're buying beachfront in, Santa Monica, you're buying it at a 4 cap or a 4.5 cap, but you're buying in Austin at a 3.4 cap. Today, SOFR has risen to 5.32%. Austin's market occupancy has dropped 88% with a 20 to 30% increase in supply coming. That is conservative because 120,000 units are being brought to market in Austin right now, leading to the lowest out of 232,000 available apartments. So they're increasing supply by 50%. To the lowest Austin's market occupancy of all time. Multifamily cap rates have expanded to 6. Even if markets stabilize at a 5 cap, we must increase the net operating income by 50% to get to break even. Think about this. They'd have to increase rents double. They'd have to double rents in a market where inventory is increasing and rents are softening, right? NOI ultimately cannot cover both. Debt service increasing from $171,000 per month to $340,000 a month, and increased operating expenses. Recent BOVs have valued the asset at $160,000 a door, and the debt is $200K a door. It is not worth the debt, Given these circumstances, it is not financially viable to continue. We greatly appreciate investors' contribution to the capital call in March 2023. However, consider the market conditions, it would not be imprudent to utilize the remaining funds. Our goal is to return as much of the capital as possible to investors who participate in the capital call. Now, the syndicators made out like fortune, right? They made out like bandits. GVA team is going straight to the bank, right? Most likely, unless, most of these syndicators, they don't put up much money. I'm not sure GVA, their specific situation, but most syndicators don't put up much money, right? If any. They'll find the deal, they'll manage the deal, and they'll scrape a lot of cash off the deal. But yeah, it's a very unfortunate situation. So he lost 100K. People say 100K, whatever, not a big deal for him. But look at this. The plot thickens as he says. What he says is that no, it's not just 100K. He's also has to repay $138,000 loss from 2021 when I made the investment. So look at what happened here. So this screenshot from the 2021 K1, when this investment was made, shows $138K of bonus depreciation taken. This will all need to be recaptured. Essentially, that means the foreclosure will result in recapturing the expense of $138,000, leaving you with a tax liability. Like, you ask yourself, okay, is it just that one deal? Is it just Austin? Maybe Austin is, that rare type of circumstance. Then you see this, Tides Equities, right? Tides falls behind $150 million in debt. $150 million in debt. This happened, call it a month and a half ago, November 6th. Then you see this guy. Everyone's seen him on social media. Real estate investor warns the U.S. is entering the greatest correction of his lifetime. So when he says the greatest correction of his lifetime, and you look at what happened, he was raising a ton of money. Maybe his deals are great. Maybe they're exceptional. Maybe he's a really, really good syndicator. I'm not saying anything bad about him or anybody else specifically. But what I am saying is when you're in a market and rents are going down and insurance and taxes are going up and borrowing costs are going up and you buy deals at a 3 cap, a 4 cap, a 5 cap, it's a problem. It's a problem, especially when you're 50-year high in apartment construction and you're seeing a situation where a lot of people are losing their jobs, beginning to lose their jobs. 40% of all mortgages were taken out between 2020 and 2021. A lot of people are going to be forced to rent out their homes to try to hold on because they're negative equity. They're upside down on their properties. You're going to see rents continue to go down, no doubt about it. And plus, you're seeing Biden bringing forward a $35 billion grant to assist people with converting offices to apartments. You're going to see more and more and more supply come over the coming few years, dragging down rents further. So most people that were investing in real estate syndications the last couple of years, they did not realize this, but the syndicator, in most cases, were getting 0%, interest-only loans. They were basically paying none of the payment was going towards paying down the actual debt of the property. It was just paying interest. So paying 2%, 3% interest. So when you're doing that, almost every deal makes a lot of money, right? So now when you have to refinance, people don't know this. Not many people know this, but when you buy a house, you're buying it on a 30-year fixed rate loan in most cases. When you're buying a commercial deal, every 3 years, 5 years, 7 years, you have to go back to the bank and ask them for another loan. And the bank is going to look at the income, they're going to look at the expenses, and they're going to decide how much, or if anything, they want to lend you on the deal. And if they don't want to lend on the deal, or maybe they say, you know what, you need to come to the table with 5 million, 10 million, you don't have it, your investors don't want to comply with a capital call, the bank takes the deal back. That's what happens, right? And we're walking into a situation where last 3 years, everybody was investing in these deals. So when you start to look at this, you're like, all right, well, maybe it's just real estate syndicators, John. Maybe it's just, maybe it's South Florida, maybe it's Austin, maybe it's other markets. Then you look at Airbnb. So look at this situation. This property cannot be short-term rented as there's an STR permit cap in the neighborhood, right? So you're like, okay, well, they bought this deal in March of 2023. It's like 6 months ago for $1.4 million. Now it's listed for $635,000. It's a short sale, right? It's a short sale. You look at that, you're like, all right, well, you look at San Francisco. This deal was purchased in 2016 for $3 million, and it just traded for 2.275. You're like, all right, well, the guy just lost the person just lost $1 million on that deal. And then you're like, all right, well, 58% of American households now own stock, which is at the highest time per the Federal Reserve, right? In U.S. history, going all the way back, the highest point in American history, people are now stock investors. And they're not cutting rates. They say it's premature. So when you look at these numbers, you look at what's happening, I personally don't think it's just Noah. I don't think it's just Noah. I think there's millions of people like Noah on different levels. Maybe maybe they have less money, maybe they have more money, but people on a variety of different financial means are investing in real estate, and they're getting a rude wake-up call because a lot of these deals are walking into bad times. I personally think we're going to see a situation where banks are going to need to unload this inventory. They're going to take back tons of deals, and they're going to need to find buyers for them. Position yourself in a place to where you could be that buyer, because the great fortunes are made when the masses are afraid. In the last couple of years, the masses thought you couldn't lose any money investing in anything. Everything only goes up. The next couple of years, people are going to think everything just goes down. That's when you want to go out there, know what value looks like, have a really, really good game plan, have a great strategy, cash in the bank, good credit, strong income. You want to have everything buttoned up. You want to be able to walk in there and pick up one great deal, two good deals, three good deals. Just keep buying more and more and more. All you need is really one great deal to change your life. What do you think about this entire situation? Do you think we're walking into a very, very, very big turn of events for the real estate market in 2024, 2025? Drop below. Let's have a conversation. I'm thinking so. And if you'd like to fix your credit, maybe you have any late payments or charge-offs, medical bills, any type of negative or derogatory items on your credit report, we'd love to give you a free strategy session at my company, GreatCreditFast.com. We recently just hired 2 new employees who used to work at Equifax doing disputing. So if you have any specific or complicated situations or any situation you'd like to run by them, it's a free strategy session. You can book a call below, and I'll catch you in the next video.